All right, welcome everybody back to another episode of Proof of Vision. We had an energetic conversation today with Sehaj. He's the founder of Avantis, which is a perpetual DEX trading platform built on Base that's seen a lot of traction lately. They've really kind of exploded in terms of trading volume, active users on the platform, and it was interesting to talk to Sehaj because one of the main things I always ask is like, how are you competing with Hyperliquid, right? And his answer was really really good. Obviously, watch the episode for more details, but they're not trying to compete with Hyperliquid on the same assets. They're focused more on RWA and maybe higher volatility assets. Things like the S&P and the Nasdaq, and bringing those on chain and kind of using AMMs, which is something I think has lost some of its momentum. Everybody is so focused on order books on chain because of the success of Hyperliquid. So that is getting a lot of the attention lately. And I think that Sehaj has a really, really good outlook on like what the advantages of AMMs actually are. So anyway, great episode. Obviously, if you enjoy it, please like and subscribe. And we'll see you on the next episode of Proof of Vision. Thanks. Take care. All right. Welcome everybody back to another episode of Proof of Vision. Really excited to bring you this one today, especially because rate cuts just they haven't taken place yet. There's rumors that rate cuts are on the horizon. So the market is pumping, which is great. The market's been volatile as it usually is, and nobody better to talk to than one of the top perp dexes building in the space. So Sehaj, we have the founder of Avantis. How are you?
Hey, thanks for having me, Kirk. Doing super well, especially after today.
Yeah, I bet. It's always good to be in the perp space, no matter what, is what I always say. So, yeah, fantastic to have you on. Before we start talking about Avantis a little bit, let's talk about your background. How'd you get into crypto? What were you doing prior to crypto, and what led you down to the rabbit hole?
Yeah, so I think how I got into crypto, I was doing investment banking in 2021 at Lazard in San Francisco, doing tech banking, mergers and acquisitions. But then around that time, ETH was pumping, just like it is today. In fact, it was at the same price in 2021 that it's at today. So that's like full circle for me after 4 years in the space. But got into crypto because ETH was pumping and I just could not buy traditional stocks or bonds or anything else as a part of like a big bank and figured like I should buy something else. Pretty much got into crypto because of that. So very stupid reason to get into it. But then once I did, I bought Ethereum, I sent it on chain. I ended up like using Aave to get some yield on Ethereum. And then when I understood how Aave works, the fact that someone could permissionlessly borrow my money from around the world, I don't even know who this person is. I think for me, it clicked then as a consumer. So I always came at the space from the perspective of being a consumer, which is why when I started working at Pantera Capital, I became a consumer investor there, focused on DeFi, gaming, NFTs. So really loved game theory and consumer apps. And then when I transitioned to being a founder, I figured like I want to build a consumer app that people can like, use, touch and feel, and then experience that same magic that I did when I first used Aave a couple years back. And so that's what led me to Avantis, starting Avantis in 2023 in June. I really thought that people obviously have experienced the magic of crypto native assets, but they've not experienced the same thing for real world assets on chain with leverage. And so that was the journey that led us to start Avantis. We launched in Feb of 2024 on mainnet on Base. So we were one of the first protocols, first perp dexes to launch on Base and also be backed by them, luckily. And fast forward about 1.5 years now, we are the largest perp dex on the chain. We offer 80 assets. 20 of them are RWAs. We launched some exciting assets even yesterday. So SPY and Nasdaq, which are super fun to trade in this, especially in this time period. And the goal really is like, 100 plus assets, a lot of liquidity for them, limitless leverage, and various ways to trade them beyond just your regular leverage, which I can get into later. So that's a little bit about us, me, how I got into crypto, and then Avantis as well.
Absolutely. Great origin story. Obviously, you have a good background to be building, this kind of a product. Um, one thing I wanted to get into before we start diving into Avantis a little bit more, or Avantis. I'm American, so I butcher names. But let's talk about the perps landscape a little bit, right? Obviously, post like FTX collapse, I think decentralized perps exchanges have been gaining market share. I mean, obviously, sexes are still kind of dominant, but market share is kind of shifting, larger and larger to coming on chain, I think. And so when you think about perps today, a lot of people think about Hyperliquid. Obviously, Avantis is kind of creating like almost this competitor, in my opinion, on base, right? But I'm curious to hear your thoughts on like this sex versus dex kind of paradigm shift that we think that we're seeing, or are we not seeing that? Just kind of want to get your opinion on how do you think the user flows are looking and what we think we see in the future.
Yeah, definitely. I think my personal view is that like we don't want to compete with Hyperliquid or any other centralized exchange because the reality is that no DEX can outcompete a sex, or I should say outsex a sex, right? That's the right way to put it because you will need some elements of centralization to make that happen. And then we see AMMs as a primitive, not a crutch, to build net new things that don't exist. So why is it that the SPY and QQQ have not been tradable with a good amount of liquidity on chain before? Because no market maker will touch these assets on chain because they don't have the specialty and the expertise to hedge these assets off chain on the TradFi side. So we don't need market makers to do that for us. We can do that ourselves on an AMM. So that's one example. And then another example is why do centralized exchanges not offer super high leverage? Because a traditional market maker is on the other side of that high leverage trade and they're taking liquidation risks, they're taking price slippage risk. But in Avantis, you can trade with up to 500x leverage with zero fees upfront and pay only from your profits. That's a new primitive we've designed because we're built on AMM. So I think we look at this very differently, that it's a niche that we've created. And Hyperliquid is an amazing dominant niche of its own. And I would say it's the more prominent and more like well-known protocol from the perspective of like traditional perps. And they'll continue dominating that for sure. They basically brought order books on chain in a very like liquid way, right? Hence the name. And so I think they're obviously insanely good and they do what they do, but I think we want to not ever copy them in any way possible. We want to like focus on our niche, build net new RWA primitives and net new trading primitives.
Gotcha. Makes sense. Okay, so to kind of summarize that, right? You think the AMMs provide you more flexibility to list more exotic assets. Well, not that RWAs are exotic, but in terms of like on chain, they're a little bit more exotic right now. But obviously, RWAs have a lot of implications for the future, right? So that could be like a growth vector that almost I could see Avantis kind of specializing in versus Hyperliquid. It's good to know these things because, again, as I'm coming into this podcast, I'm thinking, Avantis versus Hyperliquid, competing for market share, but you're competing for different market segments.
Yes. So I would say the way to think about it is that who are the biggest winners of the last 2 years in the cycle? I would say like obviously besides Hyperliquid and Perps, which obviously always do well, it's front ends and it's memes. So like Pump.fun is the biggest winner outside of Hyperliquid. And then there's a lot of front ends built on Pump Fun. Like Moonshot is like a very big winner of the cycle. And so that just proves that people are like very nihilistic and they want to bet more than they want to own, right? If perps and memes are the biggest winners and now prediction markets, that means people don't want to own anything. Our generation wants to own nothing. We want to bet and move on to the next thing. And so we had some traders from HL with the .hl names, right, coming into the Discord. And all of them were saying, look, we're so happy that Avantis is not building a pro exchange like Lighter or Hyperliquid. You guys are focused on like a high volatility bet vibe. And that made me very happy because that's what we've been seeing in terms of PMF on our recent product, which is the zero fee per product that I told you about, built for high leverage scalpers. Traction skyrocketed since then. And so it's given us a sense of confidence and direction that this new regime is where we need to like play well in, where we actually have high volatility betting across all macro assets, not just crypto. So in the next few months, that'll become more clear, Kirk, as we launch some single name equities, Coinbase, MicroStrategy, where you pay zero fees upfront to trade these assets and you pay from your profits. And that's an engineering and risk challenge for us. But for the consumer, all they'll see is like I can like go long Coinbase before their earnings.
This episode is brought to you by Pendle. Pendle is a leading protocol in the DeFi yield sector, operating as a permissionless yield trading protocol, facilitating the tokenization and splitting of any yield-bearing assets in DeFi. This allows users to speculate on future yield or earn a fixed rate on their assets. Learn more at pendle.finance. Yep. No, it is good PMF, honestly, and this resonates really well today. I saw a tweet. Obviously, DATs have been this huge thing. You already mentioned one of them. MicroStrategy obviously is the largest, but we've seen this huge influx of these DATs, these treasury companies. They're buying up these assets, issuing debt to buy more. But I think the next question becomes, how can people leverage on those, right? So where do we see these tokenized DATs? And maybe Avantis is a good venue for something like that, because that's like right up your guys' alley with in terms of like the kinds of assets that you guys want to play in.
Exactly.
I mean, drop some alpha. Am I going to see tokenized SBET on chain where I can do perps on Avantis potentially in the future?
Yeah, super high volatility, right? So it's super fun. And it's obviously very correlated to what a crypto investor already owns in their portfolio. Like I bet most of the SBET owners already have some exposure to Ethereum on chain, if I had to take a guess. So to answer your question, you will see that next month on Avantis. We'll start off with stuff like MicroStrategy and Coinbase and the Magnificent Seven. I think we don't want to like list too many assets for no reason when there's no liquidity or interest in them. We want to list a few assets with like good size, good liquidity, good risk management, all that type of stuff. So you will see it for sure next month. That's very much part of our roadmap. Yeah.
Gotcha. So then let's talk about how you guys actually scale that liquidity, right? Because obviously that's like the main focus. That's how you build your exchange.
Yes.
Let's talk about your model a little bit. You guys have done something interesting. I think a lot of people have grown accustomed to kind of like these counterparty vaults almost, where it's this pooled liquidity. You can earn fees based on the trading, but you're kind of this counterparty against the traders with stuff like GLP with GMX. I think really revolutionized that. HLP on Hyperliquid, obviously is kind of similar in that same ilk with its differences. But
yes.
tell me about your guys' mechanism. How do you guys kind of build this liquidity for these assets, and how do you manage the risks?
Yeah. So I think much like the GMX pool or like even Hyperliquid, we are a counterparty. The LPs are counterparty to all trades, and that doesn't come without risk. In fact, there is a lot of volatility and risk there. The return profile is not an upward-looking 20% APY slope, more including tokens and XP and all of that. It's never like that almost, although we'd want to get there. And the way it works is pretty simple, that when you long Bitcoin on Avantis, your LPs are effectively short Bitcoin. So if the price of Bitcoin goes up, your LPs lose money, you make money, right? But then to prevent a situation like that and to keep our LPs delta neutral, so their effective exposure is zero, we have market makers plug into the pool and they start balancing the exposure inside the pool, right? That's how it goes at a high level. So we work with market makers like Kirk, which we publicly announced a couple months back. We're onboarding some more right now. And our learning has been this, that what Jeff has done on Hyperliquid is ultimately the way to go, which is that he is the market maker and he can scale up and down as he pleases because he runs a $100 million HFT shop, right? Most protocols in DeFi cannot do that. They rely on like external market makers, incentives, points. And so the order book starts out like a little thin and then it grows thicker over time, only if taker demand scales linearly with maker interest. And that is a tricky problem to solve for, because what if taker demand dries up? Makers are like, I don't want to make here. There's nothing to do. So AMMs are very easy to bootstrap, harder to scale. And V1.5 of Avantis, V1, V1.25, V1.5 have always been about like this kind of being in this area, this small area of play. But given our learnings over the last 2 years, we now know for a fact that we have to build our own market maker. And we already have. And that's what we're going to be scaling next year. So what I mean by that is, right now to trade the SPY and NASDAQ, how are the markets balanced on Avantis? There's no market maker plugging into these real world assets. It's us balancing these markets ourselves with an internal market maker on an off-chain venue, which is super liquid. like in interactive brokers, for example.
Gotcha. Interesting. Yeah, I mean, I think you hit the nail on the head right there. If you have to rely on third parties for the crucial part of your exchange, then ultimately that's what limits your ceiling, right? Is how large can they make you? I think we saw this play out a lot with some of these intent-based perps exchanges that were kind of
Yes.
popping off towards the tail
Intent
end.
X.
Yes,
Yeah,
intent is
yeah,
a
stuff like that.
perfect
Yeah.
example. And again, I don't think you from an efficiency standpoint, if you do have the market makers on the other side, it's very efficient, right? You
Very
can
efficient. Very.
list
Way more.
yeah,
Way more. Yeah, yeah, yeah.
list tons of assets, right, with depth, et cetera. But you're limited to the amount of risk that the market maker is willing to take. And so,
Yes.
and their interests aren't always aligned 100%, obviously, with the exchange. So having your own makes perfect sense, from
Exactly.
a alignment standpoint.
Exactly. Like when you have your own, you can bleed money on a daily basis just to provide the best rates because you know that long term that'll retain the best takers. And so it took us a while to understand that. Look, of course, we're all builders and learning every day. But I think now that we do, it's going to be a big focus for us, and we're going to overhaul the entire platform. I think the platform served well to prove a point, which is that look, people want high volatility betting, people want RWAs, but Avantis hasn't reached that scale fundamentally at infrastructure level where we can scale it to nine-figure OI now, all of a sudden overnight if we wanted to. And to get to that scale, we're working kind of very hard on the next iteration of the platform. So that's, I guess, some more alpha, but we are continuously learning is the point.
Gotcha. Makes sense. And as far as raising for the market maker too, that's one question I have, right? So I would imagine you guys are raising funds to fund this market maker operation. Um, is that something that you're going to be limiting to more like the private markets, or are you guys going to figure out a way to open that up to the public at all?
Yeah, so I think once we have a proven track record of ensuring that we are at least delta neutral and making money on the market maker on average, I think the goal would be like decentralized, not public, or not private, but rather a 4626 vault that auto compounds the earnings back into the vault itself, and then it gets a portion of fees, it gets a portion of tokens, like make sure we can scale that with the help of our community. I think that would be the best.
Yeah, that's like the end game, right? The end game boss. That's awesome. That's awesome. I mean, you don't for anybody listening to this, I mean, you don't normally hear that, right? You would not normally hear that. I expected you to say that you guys are going to the private markets to raise private funding for that, right? But I think it's really cool that you guys are thinking about ways to open that up. So awesome. Okay, so we kind of tackled the liquidity part of it. Now let's talk about the oracles. Obviously, kind of with this model, just like with many other models, oracles are like vitally important. They can get exploited, they can get messed with, and then that can cause really, really bad situations on these exchanges. Uh, so how are you guys kind of tackling that from a security standpoint, from an architecture standpoint? Talk about the Oracle structure a little bit for Avantis.
Yeah, definitely. And such a, lot of PTSD, when you ask that question, as we've dealt with Oracle latency attacks a couple of times on the platform. And so I think there's a couple of things here. One is that you need to have good monitoring and robust security systems built into the platform for you to be understanding it's even happening. Because a lot of times, like a random wallet comes in, takes out money via like a latency attack, you don't even get to know. And that's not the case with us. We are like super active, team of 13, like all over the globe. We have pager duty set up. We have like alerting mechanism set up. So we know exactly what's happening on the exchange. And then in terms of latency attacks, I think it varies by the liquidity of the asset. So something like a Bitcoin, we use Pith, and the chances of latency attack are very low, but still not zero because it's still delayed. And in times of volatility, it's even more delayed, right? Um, so we use Pith core to be specific, which is like about a 1 second delay versus the Binance price. But that 1 second is good enough for a HFT guy to come and scalp and leave pretty much and make like thousands of dollars, right? Um, for the average user, they won't care or notice the difference. In fact, like a composite price is better for them because it prevents any wicks, liquidation wicks and stop loss scam wicks as we call them. So first thing is good monitoring helps us detect these traders, appropriately deal with them, add any kind of manual delays so that there's no like chance of a latency front run. The second thing is as we move towards V2, we'll be using the leading price of any asset. So like if we're talking about the S&P 500, CME is the leading price. The Nasdaq is the leading price for the Nasdaq, right? Those are like low latency prices which come within like 20 milliseconds or lesser, 10 milliseconds. And so I think for us in V2, we'll rely on those. V1, we have manual delays added based on the order type and the liquidity profiles. And then we have monitoring enabled for all of these assets, all of these trades on a daily basis. Um, yeah. So long-term solution is V2, but even in V1.5, we do actively monitor and tackle these types of attacks. Yeah.
Gotcha. Makes sense. Makes sense. And I think you guys have fallbacks too, don't you? Don't you use? I know you said Pith Core, but I think you guys have other oracles that you also fall back into if you need to. Is that accurate?
Yes, we use them more so as a sanity check. Like let's say in case something happens to Pith and it just goes really off, it gets hacked. We still have a sanity check against like a Binance feed or a Chainlink feed to make sure that we might circuit break the order and not let it go through rather than go through at like a exploitative price.
Gotcha. Okay, makes sense. Makes sense. Okay, so we talked about liquidity, talked about oracles, two of the most important parts. You talked about the market segment that you guys are really targeting, right? Which is like, RWAs, again, high volatility bets makes sense. Now let's talk about go-to-market strategy a little bit. Obviously, I think you guys have like over 50,000 active users, which honestly for most apps in crypto, like those are impressive numbers, right? But let's talk about how you guys have accomplished that. You launched, I think you said, what, February of 2024. Up until now, I mean, it's pretty healthy traction, especially competing in the perp space. So how have you guys accomplished that? I know you have several different, I guess you want to call them bells and whistles, for the platform,
Yep.
positive slippage, loss rebates. Talk about some of these mechanisms and like how you guys have positioned those to attract traders ultimately to the platform.
Yeah, I think all of DeFi is so small. It's so small. Like you look at our daily active users, you look at Ostium, Hyperliquid. It's always in like the 1,000 to 10,000 wallets range. Wallets, not even don't even know if these are real people, Kirk, right? So I think in so far we've used crypto native audiences sitting on base ecosystem. Given we're base backed, I think that's a big part of our GTM. Kind of gathering traders and onboarding them from the base eco. I think active perp traders who like to try out and experiment cutting edge perps. Those are our like GTM as well. Um, and I think more so in the last 4 months than anything else, we've become a liquidity backend for a lot of front ends. So I don't know if you've read on our Twitter or like a Series A, but the vision really is like be the universal leverage layer of DeFi. And the layer means you are providing liquidity for all assets. You're managing the risk. You're creating these opportunities for any front end to integrate you. And the recent few months, we've had some really cool integrations. So one example is BankerBot, where you can just say, "Hey, BankerBot" on Twitter, like buy me like the Nasdaq with like 2x leverage or something, and then Avantis is on the back end and executes the trade, and they reply back on your Twitter that you bought SPY or Nasdaq or like Pepe or whatever. Um, One small example. So AI agents are building on Avantis. Then we have Nitrate, which is like almost like a PvP dot trade, but for Avantis, like a social Telegram trading bot that a team from Base ecosystem is already building on Avantis. So that's one thing. So getting a lot of diversified and new users from those kinds of platforms, which we expect to increase, and then I think we ourselves recognize that, look, you look at Moonshot, you look at any of these platforms that built on an underlying DeFi protocol, they got way more DAUs than the underlying DeFi protocol. And we also believe the same, that if you can package a Robinhood style app where you can trade Tesla with leverage, and nobody cares or knows that it's built on Avantis and it's gasless, it's ETH-less, I think it'll do wonders for our traction. But that is more of a kind of like a 6 month roadmap item for us. So yeah, to answer your question, like the base eco fund, they're backing, going really deep in the ecosystem there, uh, point system, and then being a liquidity backend for a lot of new types of front ends has been our strategy.
No, makes sense. Makes sense. I mean, please give me this. I just want like a killer mobile app that's building on top of you that I can just like
Yeah.
it sounds too good to be true. And so actually don't come out with it because my bank account will suffer. I'm a terrible trader.
Yeah.
I'm an
Yeah.
awful trader. So don't do that actually.
Yeah. Yeah. No, we want people like you, man. But we end up getting people like, HFT guys trying to exploit low latency stuff. And I'm like, dude, where are the Kirks of the world on the platform? Like, we need these guys.
There
We
we go.
need these.
You found him right here.
Yeah. Yeah.
So look no further. Look no further. Uh,
Exactly.
it makes sense. But you do have several things that would help me. Okay, so like let's talk about what is positive slippage. I've seen this. I'm trying to wrap my mind around it. But what is positive slippage? What were you guys trying to accomplish with that? How does that help traders on the platform? How does that help the platform?
Yeah, so very simply put, every platform, but especially AMMs, need to keep skews balanced and not have because it's good for the platform, it's good for takers. You pay less funding rates, and so one of our incentives of the many to balance platform skew is positive slippage. That if you're going against the grain and you're shorting ETH right now and everybody is long, then you should get a favorable price compared to the market. So you enter the trade positive on your gross P&L, and that's an incentive for you as a thank you to like balance Q, because the benefit we give you is like way lesser than the risk to the LPs if you don't balance that trade. So that, along with funding rates, along with another novel mechanism called a loss rebate, is what we offer to makers on the platform to balance Q. But I think again, Kirk, the platform was designed very much with takers in mind. And then as we kind of scale, we realize no, we have to cater to this audience as well. And given it's fully on chain, we have to now overhaul the platform to cater to both in a very synergistic way. So I would say the platform's not optimized, in fact, for makers. It's very optimized for takers. But V2 will be optimized for both, and we'll be able to scale to like 8, 9 figure OI rather than be constrained on like 7 figure OI. Yeah.
Gotcha. No, super interesting. And I mean, it really is like those small things, though. I keep going back to it. Like it's those small things that build a really, really good UX, that ultimately attract the traders and the users that you want ultimately. One of the ones that you guys have had, you already mentioned it at the beginning, I think, right? Zero fee perpetuals has been like this explosive growth mechanism for you guys. It was for GMX as well. Like GMX had, I think zero fee perps on ETH and Bitcoin for a while. And again, that was massively successful. But how do you accomplish this? Because it sounds like too good to be true almost. But how do you guys actually accomplish this? And what are zero fee perpetuals?
Yeah, so zero fee perpetuals, at least how we define them, is that you pay no taker fees upfront and you only pay fees from your profits. So you pay a portion of your profits if you win. And if you lose, you have no like alpha decay from fixed fees or margin fees or funding rates. So you could technically hold a position overnight or like 2 days, 3 days on high leverage and then not pay any borrow fees or holding fees on it. And the way that the protocol is aligned to make money there and LPs and market makers is that if you do win, you share a portion of your profits with the protocol, and those fees scale much more with your success than a fixed fee model does. And so if you make 10% profits on a $10,000, gain, we get $1,000 there. And maybe that money is generally lower than a fixed fee position would have made, but then it just entices you to open that trade in the first place psychologically, right? So we see a lot of traction here. And I think, again, a lot of work to do to improve latency, spreads, reduce win fees, improve risk management. But I think we proved with 1.5 that people like this. And given we now know that, we'll focus a lot of the efforts on scaling this to multiple assets and then improving the experience.
Gotcha. No, it makes sense. Makes sense. So you're basically you're betting on volume. You're like, hey, look, more people will take these trades. We'll make
Yes.
money. We'll make money if they make money, and we're happy with that because we want
Yes.
more and more people will stack, on a
Exactly.
block like that.
Exactly. Like their success is our success, literally. Like that's how we say it. And the protocol takes zero money, literally, if you lose, because the losses are just counterbalanced by a market maker and they don't get anything out of it either. So everybody wins when the trader wins. So it's in our best interest to design a system where they continue winning.
No, absolutely, and obviously your model allows you to be pretty flexible rather. Like I think you got what yesterday. I think you said it earlier, right? You integrated Nasdaq, you integrated the S&P. So it's like being able to access like a zero fee perp that I can go lever up on the S&P. When you just hear news like you heard today, it's just huge. It really is, especially from a psychological standpoint. You already know that
Yeah.
people are obsessed with gambling. We said that at the beginning, and so yeah, I think you guys have the right like user psychology in mind. I think as you guys are designing these various mechanisms, which is awesome to see. And really leaning into that a lot, I think, is up to your advantage as well because a lot of projects I'll talk to. It's not as aggressive, right? They're balancing like they're more concerned about balancing protocol health maybe than like going after that growth, which again is a fine line,
Fine
right?
line,
They're
very
really
hard. Yeah, it's so we have it's just a funny insider joke, but like we have a risk lead, and he's obviously like a very good friend of mine, and he's been at Avantis for 2 years, and then we have heated discussions every time, and the team's just looking at us. They're like, when will this be over? Because I'm saying it's time to relax limitations. You're like, no, like you don't know what you're talking about, and I'm like, we got to grow, and so we have these discussions all the time, and it's almost like a bank's compliance department versus a bank's like growth desk or something, like so. But it's if you don't grow sustainably, it's not really growth. It's just a farce. So you have to make sure you have those systems in place, really.
Yeah, absolutely, absolutely, and obviously a big part of your growth too. I think you said again at the beginning is you have the backing of Base. They've been very supportive of you guys. Um, However, I mean, I think we are seeing a lot of appetite for like cross-chain access to some of these platforms. So I wanted to talk about that a little bit. How are you guys viewing kind of this like omni-chain environment that I think a lot of people are talking about? There's a lot of heavy focus on it. Um, do you guys think about that at all, or do you think more like, hey, like Base and Coinbase, in my opinion, obviously is a vast distribution channel in itself. Um,
Yeah,
how do you guys
yeah.
view it? How do you think about that?
I think we love Base and Coinbase. We ideally just want to be on one chain and then just get all the liquidity on that chain, and then the front ends can abstract away the fact that there is a chain. I think that would be ideal. But I think when you think of like perps, right, the sad reality is that we don't need shared ledgers technically. Like shared ledgers slow us down. Like this morning when Powell was speaking, Base was congested, right? So gas fee on the platform on Avantis was $2-3 a transaction, and so we also recognize that that is getting in the way of like scalability. But then Base is so well integrated into all the major centralized exchanges. Like anyone can send money to Base mainnet. On ramps will integrate them. Coinbase is obviously like one-click integration into Base to get your funds on Base within seconds, while being in the US, while being in all major geos, and Coinbase itself is expanding. So I think ideally we stay on Base, but I think we ask ourselves multiple times like, are the UX trade-offs of like trades not going through or gas fees being high, like how do we deal with those? But I think in V2 we can solve for that while being on Base mainnet. Similar to how Drift is on Sol, but they're still doing super well with like half a billion OI, like half a billion valuation. Like TVL is also surprisingly half a billion. It's funny that all the numbers are half a billion, but uh, getting there would be nice for sure. So I think you can be on main chain and then just make your protocol in a way that accommodates the chain's technical deficiencies because of the chain's distribution advantages. Because ultimately, good tech is great, but then you need the distribution. Yeah,
Yeah, for sure. I agree with that 100%. If I was in your shoes, distribution is king, I think. Absolutely. Especially if you see a partner like Coinbase and like how aggressive they're starting to become in terms of integrating like on-chain apps into like the actual Coinbase platform.
exactly,
Like I think that's already happened
exactly.
for Aerodrome, on the
Zora, Aerodrome,
yep.
like yeah.
So
So definitely, I think it's
I'm starting to
yeah,
feel like Avantis might be coming personally, but we'll see.
yeah. We'll see how that goes. I think it's a big, perps are a little bit different of a beast, compared to spot and compared to lending, compared to social. Perps have always been like a regulatory scapegoat in some ways. I think that's changing, obviously, like with Hyperliquid entering the US, with poly market prediction markets, with Coinbase launching perps. I think there's so much action and so much positivity on the fact that stop like making this a thing. Like stop making it so that perps are like bad. Nothing is bad. Memes are okay, but perps are not. That makes zero sense logically. Perps on liquid assets are not okay, but memes on illiquid assets are okay. That makes no sense, right? So we're excited about the future and the narrative, and definitely the Coinbase thing is they've been very supportive, and I'm very appreciative of their support. I think we'll continue evaluating how that goes. Yeah.
Awesome. Yeah, I mean, I think you guys are set up well, personally. So one thing I wanted to ask about, in terms of like what comes next. You talked about building maybe the next version a little bit of alpha there. Um, Talk about specifically like some features that you guys want to add, and then also are there other products? I think there's been rumors of prediction markets, maybe sports betting, et cetera. So maybe talk about where you want to take the Avantis product into the future. You talked about the front ends already, but like from like a product feature standpoint, what are you thinking there, or like what are some things you can reveal?
Yeah, no, we've been very public about this. Maybe not as verbal about it, but definitely we've written this in our docs as well. That for V2, we want to have the AMM be much more modular than it is today. We believe again in AMMs where we're not big fans of order books because we're super constrained on what we can try out, and just to try things you need to do like 10 other things which we don't want. But for V2, we want the AMM to be powering not just perpetuals on crypto and RWAs in a scalable way, but also be able to power like house games, for example. So getting into the casino, sports betting style vibe where you can like throw parlays, and those are not hedged. Of course, those are like you throw a parlay, likely you lose, but you can win. So that's more like a casino in a way. Um, and again, the same liquidity pool can back all of that. Then we can have a separate pool for like ZFP, zero fee perps, where like you can have high leverage trading against the house. Maybe no need to hedge those, right? So one AMM, multiple products, all catering to this common vision of like making good leverage products on chain for all kinds of assets and all kinds of markets. So assets is obviously what we've done in V1 to V1.5, Bitcoin, gold, crude, SPY, equities. But markets is something where prediction markets, right? They will also one day become mature and need leverage. We'll be there. We'll be there building on poly market, arbitraging funding rates, arbitraging odds. I think those things will become much more interesting once these markets become even more mainstream than they are today.
Gotcha. Yeah, cannot wait for that. Cannot wait for that. I guess to round out the discussion, the only thing we haven't touched on is obviously you guys have the XP program running. Um, what can you tell us about that? I mean, is there a token in Avantis's future? Is that something you can speak on? If there is, I'm curious more about not when token, but like what do you envision the token will do if you are going to have a token, that is.
Yeah, so we will have a token. I think we've said that publicly in a lot of our posts, so like no problems disclosing that. And I think the token will be tied into the product very deeply. I think we think that makes a lot of sense. So as you know, like LPs are powering the liquidity economy of the protocol, and they're bearing the risk of the same. And we want to make sure that LPs have a fallback um, in case something does go wrong. So if you looked at Aave's security module, I think we've taken some inspiration from that. I'll just say that to begin with. And then on the trader side, we want to make sure that traders feel the need to hold the token so they have a better trading experience than not holding the token. And of course, that ties into fee discounts, that ties into profit sharing discounts, that ties into XP boost, that ties into early access for new products. I think a lot more things that we're contemplating. And then the token itself should have some fundamental value that's directly tied to economic activity on the protocol. So, you know, more on this later, I think, when we make some official announcements, but we do want to eventually tie token value back to the protocol. Yeah. If not immediately, over the coming months. Yeah.
Awesome. Awesome. No, I mean, you hit all of my trigger words there. I think, again, it's awesome to see. There's been several guests that I brought on here the last couple of weeks, the last couple of months, where we're talking about the token, and it's just such a change in paradigm now. Like usually it was like, hey, it's another boring governance token.
Yeah,
But
yeah.
like I think with the legislation kind of turning in everybody's favor too, like it's just opened up so much more creativity that you can have for an actual utility token that does something that has economic value that again, can do different things for you. But if you're a trader or an LP or whatever your kind of stake is in the platform.
Hmm.
So it's been awesome to see and awesome to see that you guys are thinking about those things very deeply as well.
Absolutely. And this is something that evolves, right, over time. And we'll continue to kind of keep our ears to the ground and make sure that we're listening to our community and listening to and looking at what's happening in DeFi in terms of innovations, where the puck is going. So
Yeah, absolutely, absolutely. It's been great. It's been great having you on, Sahaj. I know time's precious, so I think it's probably a good place to start to wrap up. But before we do, the last thing I want to like leave, I think listeners with is, I think you guys just recently announced that you have a competition going on. Do you want to touch on that at all and kind of what that is?
yeah, so simply put, it's not that deep, just a nice, fun competition where we give out 150,000 Optimism tokens, which is worth $100,000 over the course of just 3 to 4 weeks. And every week, the amount of tokens given out increases, leading up to a certain event. So I think, make sure that you like participate, get the most trading in, and if you already use Avantis, this is a great time to stack XP.
Yep, absolutely, absolutely. And it's got a cool name too, doesn't it? Is it what Predator? Is it called the Predator
Yeah, so we have Vanta as our mascot, which is a cheetah, and
Yep.
so it's all about getting that alpha. That's it.
That's you're attracting my inner spirit right now. So
Inner degen, inner
good
degen. Yeah, yeah,
good marketing.
for
Get my
sure.
blood boiling. No, thanks, Sahaj. It's been great. Great to have you on to talk about the platform a little bit. We'll have to bring you on again sometime. As things continue to progress for you guys. Anybody listening at home or watching this, take a look at the show notes. We'll link you out to where to find Avantis if you want to check out the platform. And yeah, we'll see everybody again on the next episode of Proof of Vision. Thanks. Take care, everybody.